Are wash sales coming to the crypto space? Lord, I hope not, because if it is, it's gonna be a freaking nightmare when it comes to reporting your taxes. So although this is not final legislation, I thought it might be a good idea to take a look under the hood to see what Uncle Sam might have potentially up his sleeve when it comes to the cryptocurrency space come next tax season. Let's run it. What's going on, everybody? Brian Rivera here, CPA, and on this channel I typically talk about personal finance, entrepreneurship, investing, crypto, day trading, just a lot of things that I'm passionate about. So if this is your first time here, don't forget to hit that subscribe button. So it's no secret, the White House and congressional Democrats want to raise taxes on the wealthy. They want to raise taxes on corporations, and they also want to strengthen enforcement. And how they're going to do that is obviously hiring more IRS agents and also issuing more audits. But the purpose of all this is to fund programs such as, childcare, healthcare, education, climate change, things that matter. All of these programs and all these spendings need to be funded through additional tax revenue. Just a few days ago, the House Committee on Ways and Means just released a draft tax proposal. The committee has jurisdiction over tariffs, taxes, other revenue related raising activities, and they also have oversight over programs such as Social Security, Medicare, adoption, foster care, just to name a few. There's a lot of interesting proposals in this bill. I'm not going to cover everything, primarily because these tax bills go through a lot of different variations, and whatever's the first draft will not be the last draft, but I really want to take a look at this wash sale thing. So let's go ahead and see what exactly was put in the bill to give you guys a better understanding of what I'm talking about. Section 138153, wash sales. So this section includes commodities, currencies, and digital assets in the wash sale rule. So an anti-abuse rule previously applicable to stock and other securities. The wash sale rule in section 1091 prevents taxpayers from claiming tax losses while retaining an interest in the lost asset. The amendments made by this section apply to taxable years beginning after December 31st, 2021. So as it stands, the wash sale rule is only applicable to equities and options. Congress expects to find more tax revenue by closing down this loophole that cryptocurrency traders have been enjoying for many, many years now. Now, what this loophole is called is tax loss optimization or tax loss harvesting. And so basically, when you employ this strategy, all you're really doing is, one is you look to see, okay, what is your capital gains exposure on the year? And what you're gonna do is you're gonna scan any of the coins that you're holding in your portfolio. And if any of them are a loser, right before the end of the year, you're gonna do what's called tax loss selling. You're gonna sell those positions, right? Because you're trying to reduce your overall capital gains exposure. And what that loss is gonna do, it's gonna net against it, right? To bring down your exposure. If you still believe in that project, you just turn around and rebuy it again, right? You take the loss, bring down your taxes, and then get back in the project because you believe in that project long-term. What is a wash sale? So IRS Code Section 1091 identifies exactly what a wash sale is, but at a very high level, what a wash sale is, if you sell a stock at a loss and in a 30-day window, you buy or sell a substantially identical security or option in that same name, you've just flagged a wash sale. Now that loss gets disallowed for tax purposes and it gets added to the cost basis of your very next trade or your replacement trade. Now the wash sale rules applies to active day traders the same way it applies to investors. However, the difference here though is as a day trader, you have thousands and thousands of transactions. So to keep accurate records of your wash sales, it's virtually a nightmare, right? So you either got to hire a CPA firm or you have to find a solution that will allow for accurate tax reporting, right? Now this rule only applies to your gains and not your losses because naturally the IRS would prefer to tax your gains. Like I said earlier, stocks and options are subject to the wash sale rule, and currently as it stands, the IRS classifies cryptocurrency as property. And so this loophole allows for very savvy crypto investors to sell more aggressively. So should they change something, this loophole that cryptocurrency traders have been enjoying for years, the tax loss harvesting and optimization, they will no longer be able to do that. And now they would have to account for things, using the wash sale rule. So how would wash sales actually look in the cryptocurrency space? My assumption is that the wash sale is going to be applicable to similar coins that you trade across multiple exchanges in multiple wallets. So for example, Coinbase doesn't know what you're trading at Binance, and Binance doesn't know what you're trading at Gemini. Gemini doesn't know what you're trading at Kraken, right? So you're gonna have to not only look at wash sales across your individual exchange accounts or your individual wallets, but you're also gonna have to look left and look right to see if any wash sales were flagged across those different exchanges. So let's go ahead and take a look at an example of how the wash sale rule could potentially impact a cryptocurrency trader. So what I'll do is I'm gonna use a basic example with some basic trades that you could follow, just so that you can get an overall big picture of how this stuff works. Now just keep in mind, this is a very simple example. When you throw in thousands of trades, it gets very complex and it gets very, very time consuming on trying to figure out how to get accurate reporting. All right, so I'm gonna use myself as an example. So let's say Brian purchased 10 Ethereum on May 11th, 2021. At that time, it was $4,000 per coin, and his total cost basis in that position is $40,000. So around Christmas time, Ethereum dropped 50%, and he decided to do some tax loss harvesting, right? So he sold 5 Ethereum on Christmas Eve for $10,000. Then he sold the remaining 5 on Christmas Day for $11,000. How that's gonna look from a tax reporting standpoint is basically your cost basis is gonna be what you paid for it. Your sales proceeds are gonna be what you sold it at, right? So your net gain and loss on this particular trade, you bought it for $40,000, sold it for $21,000, you took a $19,000 loss. So this is how it actually looks right now today, how you would report your taxes as a cryptocurrency trader. So Brian would then recognize a $3,000 capital loss, right? So I can't take the whole $19,000 loss because I am subject to the capital loss limitation rules. The remaining $16,000 would then be carried forward as a capital loss carry forward. So in the next year, in 2022, when I start banking, making a bunch of money on crypto, I'll have gains that are gonna get offset by the $16,000 that I carried. If I don't make any money, I write off $3,000 and I'll keep carrying that forward. So let's go ahead and throw a variable in this transaction. So we're gonna keep the same facts and circumstances, but now we're gonna assume that I decided to scalp Ethereum 2 days after my original sell. So what I did was I bought 10 Ethereum for $40,000 on December 26th, and then I sold 10 Ethereum for $41,000 on December 27th, 2021. So I made $1,000 on my scalp trade, right? Here we have the original transaction, but because I bought the same coin within a 30-day window of the original sell, the loss gets disallowed for tax purposes. So as you can see up here, I would have taken a $19,000 loss, but because this is a wash sale, it gets disallowed. But it then gets added to the cost basis of the very next trade. So this loss is getting added to the $20,000 purchase that I just made on my new trade. And then this wash sale is getting added to here. So that's why my cost basis is so high. So instead of being $40,000 of my new buy, it is now $59,000 because I'm adding these wash sales in, right? So when you account for everything, you know, my net gain or loss is actually the same because I didn't lose the cost basis, right? So I made $1,000 on my new trade, and then I lost $19,000 on my last trade. So my total net gain or loss on the year is $18,000. So per the wash sale rule, the disallowed loss is added to the cost basis, like I mentioned earlier, of the new buys, and then the holding period is also added to the new trade. Now this is where wash sales can really come back to bite you. Same facts and circumstances, however, I'm going to change the last trade. So let's just say 1 week later, instead of the last week of December, I decided to trade it the first week of January. So let's just say I bought 10 Ethereum for $40,000 on January 1st. Wanted to start the new year off right. And then a day later, I decided to sell it. I sold it for $41,000 on January 2nd, which I generated a profit of $1,000. So let's look at how this gets reported. Because I flagged a wash sale in a separate tax period or within 30 days, but it just so happened to be in the next tax year, the entire wash sale that I flagged of $19,000 is now disallowed, but it's also deferred to the next tax year, right? So now I'm not getting a $19,000 capital loss carryover, right? I'm reporting 0 on my tax return. You're like, well, wait a minute, I didn't make any money. I lost $19,000. So for tax purposes, I'm claiming 0, which sucks. But however, this wash sale is going to get carried into the next year. So many times when people see this adjustment column, they automatically assume that all of this is disallowed, which is not the case. It's an informational number that is going to accumulate over the year because you are flagging wash sales as you go. But in this situation, you want to identify any deferrals that you're going to have going into the next year, and that number that your broker is going to report is not going to include that number. So if this rule is accepted, what exactly can you do? Well, my advice is, one is you want to make sure you get yourself educated on wash sales, and two is you just need to adapt, right? Just modify your trading strategy to make sure that you're not going to put yourself in a position where you have disallowed wash sales. If the Ways and Means Committee's proposal is accepted, basically what's going to happen is all of your trades after December 31st, 2021 will be subject to the wash sale rule. So my advice is it will behoove you to leverage any tax loss harvesting right now before the law changes in 2022. But again, I'm not saying that it's legislation, but it's in the bill and it's highly likely that it could pass. So after this date, your responsibility as an individual taxpayer would be to accurately track your cost basis and comply with the new rule set. So I'm gonna go ahead and say that most traders are probably gonna have a hard time trying to figure out how to implement this. And I'm also gonna say that CPAs are gonna have a hard time learning how to implement this. It's just because there's not a lot of education around this and there's just not a lot of people who play in this space. But no fear, good news is here. So I have a development team that I've hired that specifically created a wash sale algorithm, not only for the stock and options market, but also forecasting this very situation for the cryptocurrency space. So historically, I've only been using this internal to my company for stock and options traders, but now we are also pivoting to incorporate cryptocurrency. Now the wash sale calculation will look across multiple exchanges like I mentioned earlier, also your wallet, and apply the cost basis adjustments automatically for you as the taxpayer. So the application is obviously not ready for public release. It takes a lot to get an application ready for end users, but the goal is to kind of finish quality user testing, all that good stuff, and have something ready for the public during Q1. That is my goal, but we'll see. So if you're interested in being notified about when this application will be released to the general public, I'm gonna leave a link below where you can get on the email list and you'll be notified once the application is ready to start taking on new users. So the goal obviously is just to make sure that we can integrate real-time portfolio reporting to streamline tax reporting for both crypto and or stock and options traders. The last point I'm gonna make is that if you're an active day trader, you're gonna wanna familiarize with yourself with something called day trader status. Now, I already have a video out on this that's very much geared towards the equities market. However, I do plan on doing an update on how this applies to cryptocurrency traders. Should you qualify as a trader, then you may wanna look into electing mark-to-market for cryptocurrency trades. If the IRS treats cryptocurrency as a security, you qualify as an active trader, then you should be able to elect mark-to-market or at least proactively elect it. And once the guidance changes, you already have the election on file. But again, this is all based on if the tax code changes the laws around cryptocurrency trading. All right, family, hopefully you found some value in today's video. Don't forget to smash that like button. And I'm actually dying to know, do you guys think that the IRS is going to implement the wash sale rule by next tax season? Drop a comment below and let me know what you guys think. Enjoy the rest of your day. Have a good one.